Welcome to Absolute Trust Talk with your host, Kirsten Howe. Absolute Trust Talk brings you tips, tools, advice, and interviews to help you build a reliable knowledge base on estate planning, business, and finance to start preparing for your future today.
Hello, and welcome to Absolute Trust Talk. I am Kirsten Howe. I'm here with a guest today in our video podcast at Absolute Trust Council, and we're going to be talking about valuations. Let me explain that a little bit. In my business, we spend a lot of time focused on our clients' assets. That's the nature of what we do as estate planners and administrators. And probably the two most important questions that we have about any given asset when we're working with our clients is, number one, who owns it? Number two, what is it worth? And of course, our regular podcast audience knows that we talk about ownership and titling issues all the time. We are constantly hammering home that you need to own your assets in a trust and what the consequences of not doing that. So fortunately for you today, we're not going to talk about ownership and titling. We're going to talk about the more fun, interesting aspect, which is valuation. And to help us with that conversation is my colleague, Alex Spaete. Alex is a valuation expert. He's a partner with Bridge Forensic CPAs, LLP. They're here in Walnut Creek. Alex has extensive experience in business valuation, family law forensics, private industry experience in healthcare and physician compensation. And we'll talk a little bit about some of those things. He is a CPA. He's accredited in business valuation, and he's also a certified information technology professional, which is a nice bonus that his firm gets by having him working there. He's not just a numbers guy. He can take care of the IT. Alex has qualified and testified and been appointed as a courts expert in pretty much all of the courts in the San Francisco Bay Area and the Sacramento area. He's worked on thousands of litigation matters. He works primarily in the family law area, but we work with him as well in estate planning. He's commonly asked to perform post-separation accountings, analysis of real property interests, and we'll talk quite a bit about that, equity compensation, just all the kinds of property issues and income issues, all of that stuff that happens in a divorce. And also he works in what we call business divorces because a lot of those same issues come up. Alex, welcome. I'm so happy to have you here.
Yes, thank you so much for having me. Pleasure to be here today.
Yeah, you are welcome. And it's once in a while I have a guest on that I think, I can't believe I haven't had this person on before. We've been doing this podcast for so long, and what you do is such an important part of what we do that I can't believe this is the first time I've had you on the show. But anyway, better late than never. Okay, so in the estate planning world, we might need to know how much assets are worth in the planning because sometimes the value will influence the plan itself. For example, if mom wants to leave her home to one child, but she wants all three kids to have an equal inheritance, we got to figure that out. What is that home worth? Sometimes we need to know values for tax reasons, but almost always after a death, we need to get values on all the assets. And Alex, some assets are very easy to value. I can value a bank account. My clients can value a bank account. You look at the statement, you can figure that out. Publicly traded securities. That information is known in the world. You can look it up on Yahoo Finance and you can figure out how much a stock was worth on a particular day. But Alex's job is to value other kinds of assets that regular lay people like us can't possibly do. And we use him in the estate and the planning and administration world, but there are other contexts that you spend a lot of time working in. Alex, talk to us about some of the other aspects of your work aside from the estate work.
Yeah, it's a great point you raised. So with the valuation work I do is this, third party, often closely held, not publicly traded type of, company that doesn't have a listed exchange or something like that you can easily price. So I do valuations of closely held companies in that auspice, whether it's for a gift, an estate tax type purpose, as you mentioned. It could be an ownership transition that's actually maybe not in a litigated or disputed matter, but actually as part of some good succession planning, and they want to transition the company. It often is done in the context of a dispute. The one area that I don't do evaluation in those areas is actually that of like a business broker type of, I want to sell my restaurant or want to sell my business. And that's often an area where my valuation is done with the auspice that it is going to be used typically for some sort of compliance or in a matter in front of a court. And so there's often a need to have a definite figure and value that can be put to, a return or something like that. That really is, I think, the focus of the purpose of why we're valuing. As a consequence, we actually end up seeing companies and businesses across all kinds of different industries, and that hold all kinds of different assets. So it's just, I think one of my favorite things about it is you get to kind of look around at the built environment around you and realize that somewhere something is someone's job, and that there's a business that's probably been created to, make the rag that you're using to clean your car or something like that. There was a fascinating world about that.
Yeah, you get to see a lot of the things that exist in the world and we just don't pay attention to, or we have no awareness around. But you got to get your hands into those businesses and see what's happening there in order to value them. Okay, so let's talk about the common scenario. Probably the most common thing that we've worked together on is a privately held business. It's not a publicly traded business. It's not like shares of Coca-Cola. These are business entities that just owned privately, and there's no market for them. You can't go to the NASDAQ and sell your shares. And a lot of times we're talking about a business entity because it's a official entity like an LLC or corporation, but its business might just be that it owns rental property. It's not a business like it's got a bunch of employees and it's got a factory and all that kind of thing. So that's probably the most common situation that I get involved in. I know you get involved in all kinds of things, but to make it simple for our listeners. So when you're working with something like that, what are you looking at? How do you figure out the value of that business?
Yeah, it's a great question. So what I typically call those types of entities is we call them, real estate holding partnerships, and very often family real estate partnerships or something like that, because they're often all the other commensurate owners of that LLC are the members of the family, or some sort of hierarchy or family tree, some sort of relationship. And so there's really kind of two major approaches and ways that we go about constructing a value of those entities. But before I kind of go into that, I think the important distinction to understand and why there's more complexity to those types of valuations, because often I get the question of, well, okay, I own 20% of this LLC that owns a rental property that's, a warehouse or whatever the type of property might be. What's the difference of just getting the underlying real estate appraised? Like, why am I involved?
Right.
And really, I think the key thing is understanding that, if you own 20%, let's say, of a real estate holding partnership, you don't own 20% of the underlying real property. You own 20% of the LLC that owns the real property. And the LLC might also own a bunch of other things. I've had very complicated valuations where you have one LLC that owns three other LLCs,
Right.
and one of them is an operating company, and you get this really nested, crazy combination. And that's, whatever the trust attorney set up to create, that's that's the structure we have to operate under. But fundamentally, what the asset that is there is this 20% or, whatever holding percentage of the underlying company. So the real two common approaches that we look at are, one is a net asset value. So we're looking at what is the underlying net asset value of this partnership. And really the primary focus of that is usually the real estate, less any debt, and the cash that might be contained within the entity. I'm not actually a real estate appraiser. That's one type of, area or type of asset we don't value. So we typically work with a third party real estate appraiser to value the underlying real estate. And then my valuation incorporates that real estate as part of what we do. The other way of looking at it is often an income type approach, where we look at, if this is a rental property or a multifamily, apartment complex, it often generates income. It's not usually something you're just holding to hang on to just because you want it to appreciate in value. You also want it to generate income. And so that source of income can be a proximal source of value. We do have to work really closely with the appraiser to make sure that that's often an approach the appraiser is also looking at when they're valuing the property. So we need to make sure we don't double dip.
You're not double counting something, or So the underlying asset value is like maybe more of a starting point. Like, we gotta, this is what the real estate is worth, and there's a bank account, and there's an investment account. and there's maybe some computers, we don't know. Whatever this particular entity actually owns is assets, and that is maybe a starting point.
Absolutely. And
for
sometimes
you.
they own multiple pieces of real estate. So the
Right.
LLC might have, 6 different pieces of property. And so very commonly I see the range of either, one LLC, one property. That could be a really common structure, the estate planning structure that I see. And then sometimes I often see that maybe either by location or by type of property, we see these LLCs that are, okay, these are all my multifamily properties are in this LLC. These are all my rent, all my commercial properties are in this LLC, or it's by, location. These are all my Walnut Creek properties. These are all my Pleasanton properties. So it can kind of change the underlying holdings. But at the end of the day, our job is to try to identify what's inside the LLC and what does that underlying value come up with. And then really the other big part of what we're brought in and substantiating, and often why we're doing a valuation, is then the substantiation of discounts to that book value for purposes of wrapping that number inside your estate. So
okay, so let's talk about, I have a concept, I have an idea of what you're talking about, discounting, but just for our listeners, so you can come up with what you consider to be the value of the entire entity, and my client maybe owns 10% of that entity.
Right.
So the entire value divided by 10, in one way of looking at it, that's the answer. But there might be reasons why the total value divided by 10 isn't the right answer. And that's what you're getting at when you use that term discounting. And I know you have some particular types of discounts that you apply in a situation. So go ahead and talk about what those would be.
Certainly, and that's a great point. That's also why often we get involved, because there is that idea that you could just take the pro rata value. If the partnership is worth $1 million and I own 10% of it, I have $1 million interest in this. That very simple approach can be used often I find that approach can be used, especially if there's not, if the threshold, we're not worried about the estate, going over the threshold. But when there is a concern about that, the discount idea is really to look at this idea that there's 2 main components of these discounts that we're evaluating. The first is control. And it's very common in valuation world that the sum of the parts don't necessarily equal the whole. I've commonly done valuations where I've had a 10% interest, a 20% interest, and then a 30% interest, and we valued all of them. And when you add them all up, they don't actually line up to just
it doesn't add up to 100. Yeah.
it often has that problem, that issue with valuation. But the 2 key components of where we're coming up with these discounts and why they're substantiated really come under 2 main tenets. The first is that of control. If I own a 10% stake in a real estate holding partnership, I don't have 10% of even the property. I have 10% of this company that depending on the operating agreement, might have very little ability to actually do anything with. And so that has impacts on how easily you'd be able to sell or transact the interest. It also has a lot of potential limitations on how much you might actually even receive from the interest if it does create a distribution or something like that. So control is a big thing that we evaluate. We look at a lot of the operating agreements and potentially who some of the other members of the LLC might be. The other big discount is that of liquidity. The baseline for most liquid assets in the valuation world is that of a stock that you can sell and get cash in T-minus 2 days. That's usually not the case with these real estate holding partnerships. They take a little longer to sell. It can take months or years to try to liquidate a 20% interest in a real estate holding partnership. Often the agreement might be so specific that it restricts how quickly and who you can sell to. So there can be a lot of timing issues with getting your money out of the prorated value. And so to account for that factor, there's also some discounts related to either what's called marketability or liquidity.
Right. So if what you own is in theory worth $100,000, but you can only sell it to these 3 other people, and it's all spelled out and it's like a 7-month process, it's really not worth $100,000. It has, you've got to take a discount for all those issues.
And that's exactly what we look at.
Well, thank you so much, Alex. I really learned a lot talking to you, and I'm sure my audience did as well. My guest today has been Alex Spaete with Bridge Forensic CPAs, LLP. I hope you all learned a lot, and I hope you'll join us next time, and I look forward to connecting with you then.
Thanks so much for having me.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcouncil.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcouncil.com/scheduling. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcouncil.com. Thanks again for listening. We'll see you soon.
This podcast is not meant to take the place of legal advice from an attorney and does not create an attorney-client relationship. If you do have a legal question or issue, please consult with an attorney.